Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 6th of February 2022. A couple of weeks ago, when asked for suggestions of what we can discuss, one viewer suggested talking about how we're going to spend all our profits when they appear. And he was kind of saying that in jest, but it did get me thinking. Spending, saving and investing habits have changed substantially over the years. And it's an area where being strategic can be helpful in the long run. Now, what I'm going to talk about today, I think many of you already know this stuff. I think we've kind of reached the creme de la creme in terms of viewers now. And, you know, the ones that really do need to hear this are off watching some brain-rotting video elsewhere. Anyway, let's discuss this. When I was a kid in the 1980s, piggy banks were quite common for storing coins to be spent at a later date. And I remember it was also common for people to talk about how they were saving up for buying this or that particular item. But you don't really hear that term nowadays. That's all very well in the short term, but for those who want to save for their retirement, for instance, saving cash is actually a very bad idea. Over time, fiat currencies lose their purchasing power. And if someone saved, let's say, $100 in 1913, today they can only buy 3.5% of the goods that they could have bought back then. On the long time frame, it's prudent to either spend fiat to buy real goods or to grow your pile of fiat faster than it's depreciating. The steady decline in interest rates since the 1980s has also encouraged more and more people to get into debt. Back in the 70s and 80s, I reckon most people spent money that they had. Whereas nowadays, it's very commonplace for most people to finance purchases using debt. Basically, I think we have the enjoy now, pay later generation. It gets even worse though. For a time, there was a reasonable level of control over how much people could borrow. However, as interest rates dropped lower and lower, it basically became a lot easier for individuals, corporations, and even nations to get up to their eyeballs in debt. So this just kind of illustrates that. We've got two charts here. The top chart shows the ratio of consumer debt to inflation-adjusted wages, and the lower chart shows the US debt to GDP ratio. So basically, these two ratios are similar. The top one is at the individual retail level and the lower one is at the national level. Both of these ratios, we can see, have gone up substantially since the 1980s, basically meaning people have borrowed more and more in relation to what they're bringing in. So we can also conclude that many people are spending currency that they don't have. Is that a good thing or a bad thing though? Well, it's not as black and white as you might think. It really depends on how that currency is being spent. So I've categorized the ways in which currency can be spent as follows, and we'll look at each of these in turn. When it comes to buying stuff, people usually buy what they need first, and then they move on to buying what they want. Something that many people don't consider when buying something they want is whether it's something that will depreciate or appreciate in value over time. Now, this is quite an important factor to take into account, particularly if you're taking out a loan to buy something. I reckon taking out a loan to buy a depreciating good is not good. It basically means you're going backwards. Even if you are spending money that you do have, thinking about this can make a difference. So I'll give you an example here. I know someone who bought this little cylindrical box to put loose change in his car. And so this was a box made of some generic metal, and it had a little flip top lid. And they paid 1,000 New Zealand dollars for that. Why, you might ask, such a price? I mean, this box was like 10 centimeters in diameter. Well, it was the designer logo on the lid. That's what gave it its so-called value. I'd call it price rather than value personally. So, to me, that sounds like buying something that's going to depreciate. Personally, if I wanted such a box, I would have bought one made of silver, of course, or even better, an antique silver box. Not only would it be cheaper, I reckon it would have looked better, and of course it would have maintained or increased its value over time. Why do people buy stuff? Well, the obvious answer is to improve their standard of living, but I think that's only true up to a point. A lot of people buy stuff that they never actually use, or just use once. Just think of all the packed storage units that are out there. Apparently the storage business brings in over $24 billion in revenue each year in USA alone. Advertising does have a lot to answer for, as it's a psychological tool for getting people to buy stuff that they don't necessarily need. It's also common for people to buy stuff to impress other people, and this is kind of particularly achieved through things like labels and branding. There are also those who want to be perceived as being socioeconomically equal or superior to those around them. Sadly, the keeping up with the Joneses mentality can lead to financial destruction. There's actually a movie by that name, Keeping Up with the Joneses, which kind of covers that topic. Another reason people buy stuff is that they think that it will make them happier. Apparently, the consumption of material goods is twice what it was 50 years ago. And I'd argue that the population is less happy than it was back then. The actual happiness derived from excess material possessions is actually quite fleeting in most cases. Now, don't get me wrong, I'm not saying that people shouldn't buy things, and, you know, everyone needs to treat themselves now and then. So, no, I'm not saying be super frugal and starve yourself of things. What I'm saying is that what people are doing is that they're not buying things that genuinely enhance their life. There's research that suggests that spending on experiences is much more fulfilling and builds memories, and I certainly agree with that. However, it does feel like, particularly over the last decade, this has kind of morphed into being something that has the motivations that go with buying stuff. So, for example, you know, it's a lot of tourists can be found going to historic monuments or places of significance simply just to get a selfie in front of it so they can post it on social media and show off to their friends without having any understanding of what they're even looking at. So, you know, I think for me, paying money for experiences should be about, you know, having joyful, fulfilling memories and personal growth, not ticking boxes. Another way of using fiat is to maintain or grow its value, and this is done by people who think about the future. The aim of this is either to maintain or improve the standard of living into old age, and for some it can extend to securing the next generation. When we talk about standard of living, there is a hierarchy. Having funds for water, food, energy and shelter is absolutely crucial. And so I call that survival money. I think many people take it for granted that such things will always be available. But I think times are changing. The sources of these things have become increasingly centralised. That, in combination with things like supply shortages, distribution problems and inflation, mean that securing these things will become more difficult and costly in the future. Once survival is taken care of, the next level is financial security. With that comes the peace of mind that you have enough not only to cover your survival expenses, but also enough to cover emergencies. The next level up from that is independence. I consider financial independence to be different from financial security. So here I mean sufficient finances to allow you to live your life without suffering under the control of others. Okay, so now that we've gone through all the ways in which fiat can be spent, let's look at how much fiat various nations have spent. Of course, last week, USA just passed the $30 trillion mark in terms of their debt. But remember, they're not alone in terms of having high debt levels. So here we've got a list of countries and their debt levels. Do you think your country has been spending wisely? Now, of course, I'm not here to tell people how they should be spending their hard-earned cash. That's a highly individual thing. No, I'm not here to tell people what to do. I'm just telling you my take on this topic. So some of you might be curious about what I'm planning to spend any future profits on. Well, I've always had one goal, and that goal has not changed. It's freedom in all its forms. Now look, I know that money can't necessarily buy freedom, but I think it helps. Of course, the goalposts for this have changed substantially lately, but for me, that's only strengthened my resolve in terms of my goals. What are you going to spend yours on? Next up, the market update. Well, this little fella's still hanging around. So again, not much has changed. We're still in that sideways movement for gold and silver. And so I'm not going to repeat what I've said in the last 2 weeks. So if you did miss the last 2 weeks, go check out those videos. But yeah, nothing much new to add. So I thought I'd just go through a few random thoughts on random charts. So, of course, there's been all this talk about tapering and interest rate rises and so on. And they've been saying they've been tapering for the last couple of months at least, haven't they? But look, this line, it just looks like a straight line, doesn't it? And the key word here is that they said they would reduce their minimum purchases. But of course, that doesn't equate to the same as how much they actually buy. So yeah, it just looks like it's continued on this upwards trend here. So yeah, no sign of reducing of asset purchases at this point. And I was looking through the Federal Reserve economic database. I do find it quite useful to use it, but what I'm finding is various things are being discontinued. And when I looked for the sake of this show, I was trying to compare some other charts with the gold price. And normally, when I type in the word gold, it usually comes up with the London gold fixing time price or whatever it was. That seems to have completely disappeared. So I can't seem to find where spot gold is on this website. I don't know what I'm missing here. If anyone knows how to find it, or has it just disappeared? But certainly, you know, I used to just type gold and it used to just come up as the first answer. But instead, here are the results we're getting, which aren't really what I was looking for. Anyway, let's have a look at what else I was looking at. And this is the chart where I did want to add the gold price to this, but couldn't do so. So you'll just have to kind of imagine it yourself. Okay, what have we got here? Well, we've got in blue the consumer price index over here, and in red we've got the US 10-year Treasury yield. And at the moment, the thing to notice here is that this is completely out of whack here. There's a big gap. And so the question is, you know, has that happened before, first of all? Well, you see, all of this time, throughout the 80s, 90s, and well, basically ever since the 80s, the Treasury yield has always been higher than the CPI. Now, of course, before anyone says, I know the CPI is a understatement and it's pretty made up actually, but you can see my previous videos about that. But we've got to use something for this chart. So yeah, so throughout this whole time, the Treasury yield has been higher than the CPI, except for recently. Of course, we've got a time here where it was the other way around, and maybe a little bit over here, but not really. So this is not a common thing. This isn't a standard thing, and it's very different from the preceding decades. Now, another way to look at it is to subtract one from the other and produce a chart. So that's what I've done here. So this chart shows the US Treasury yield minus the CPI. And basically you can see that this is at record lows. Now, I think it would be great if we can go back even further, but I wasn't able to do that so on this platform. But yes, certainly since the early 1960s, this is at a record low here. So this is something very, very unusual. The other thing I wanted to look at, so I think it was last year, there was a lot of talk about, oh, we need money velocity to go up to get inflation. And I'd done a video about my thoughts on that, and basically I think the summary of that video was that velocity is just a fudged number, and I didn't believe that the two are related, really, to be honest. I didn't think this has to rise for inflation to occur, and it appears that that's the case here. So here you can see, I mean, velocity's barely budged since 2020, and yet inflation has shot up over here. So again, the other thing is that now we can't directly compare these charts because one is a ratio and one is a percentage change, but it's just more the direction of the change. This hasn't changed very much, whereas inflation has gone up. So personally, I don't really think velocity is worth looking at. And then I thought, well, let's have a look at what the inflation adjusted price of gold is doing. So in TradingView, there's a formula that you can use. So what you do is you put the ticker symbol and you multiply it by the current price of that commodity or whatever it is, the symbol that you're putting there, and then you divide it by the CPI. And so that gives you this chart here. So you can do the same for silver as well. And so we've got that 1980 peak at 20,000 US dollars. Right now we're just below 12,000. So if in inflation adjusted terms, we are almost half as cheap as gold was in 1980. And in fact, interestingly here, we never did make an all-time high last year. And then finally, I thought, let's have a look at commodities. So this is the S&P Goldman Sachs Commodity Index. This I've put on the log scale. And what I've done here, I joined these two lows here with this low here, and then just extended this up to join this spot over here. And that gives us this channel here. And what we can see is that recently price bounced off that channel, came down, and it's broken out through that channel. So I think this is a big deal. I mean, this kind of looks like it's just been consolidating, and this to me looks like this is breaking out. Now, of course, there is going to be some overhead resistance. I'm kind of thinking around that 700, around that area, and that's just because of all this price action here. It could be just below that as well, somewhere around here, in which case you might get something like this. And you know how bad that correction is, you know, we'll have to see. I mean, it could even come back down to retest this before making its next move upwards, but to me, this looks like it's on the way up. Right, that's it from me. All the best and see you next week. Bye.